Hello everyone, welcome back to our channel, The Accounting Edge. Today we are going to discuss about types of accounts. Before that, we have to discuss two types of system in accounting. First one is single entry system, second one is double entry system. In single entry system, we have only one aspect of transaction recorded. It mainly recorded income or expenses or cash inflow or cash outflow. You can check the slides. You can see the inflow and outflow of the cash and its recorded expenses and income. It's basically used by individual or very small firms. Suppose we receive 5,000 from sales, we just only enter in single entry system as cash received 5,000. For double entry system, every transaction affect two accounts, debit and credit. If we go for one example, the same example what we discussed about single entry system, if there is cash sale 5,000, we make in double entry system as cash account 5,000, that means cash we received, and credit the sales, that means the income. Most of the companies, if it's a small scale or large scale, mainly using double entry system. You can see the example from our slides, that one, if we bought the machinery account debit and the cash is credit. If we receive the rent by cash, we make the entry cash account debtor to rental income. So now we are going to discuss about the types of account. We have three types of account: real account, personal account, and nominal account. This is the main basic for the accounts. So we have to understand what is real account, what is personal account, and what is nominal account, and we have to identify each account under which type of account. And we have golden rule that applies to every transactions. So for real account, it's debit what comes in, credit what goes out. For personal account, debit the receiver, credit the giver. For nominal account, debit all expenses and losses, credit all gains and income. So we will go through one by one. First of all, we will go through real account. Mainly all the asset is under real account. Even cash or bank or machineries, land, building, it's all under real account. Suppose we bought one furniture by cash. So what is the entry will be? So what we are getting, that means furniture is coming to us. Furniture is coming to the company. So debit what comes in. So furniture we have to debit, and what is going from our company? Cash. So cash going to credit. So the entry will be furniture account debtor to cash. That means debit what comes in, credit what goes out. And secondly, we will discuss about personal account. The golden rule for the personal account is debit the receiver, credit the giver. Personal account related to persons, that means natural or artificial, whichever is, it's related to personal account. Suppose we receive cash from one customer, so we have to identify this account. So cash, as we discussed, it's a real account because it's an asset. So here the entry, journal entry will be cash account debtor to customer A, B, C, whatever it is. So you know the golden rule for the real account. Debit what comes in, credit what goes out. So here cash is a real account. It's coming to company. So debit what comes in. So here we are making debit cash. And personal account we are discussing now. Debit the receiver, credit the giver. Who give this cash? The customer. So the customer will be credit. Now you can see the entry cash account debtor to the customer. In the same sense, if we are paying some money to supplier, the journal entry will be supplier account debtor to cash. The supplier is a personal account. The personal account, the rule is debit the receiver, credit the giver. Who receive the money here? The supplier. So we make the supplier as debit, and cash we paid. So cash as we know, it's a real account. Debit what comes in and credit what goes out. So the money going out from the company, so we will credit this cash. And the last type of account is nominal account. The nominal account is related with profit and loss account. Mainly the income, expenses, and whatever it is coming under profit and loss account, it's all coming under nominal account, because profit and loss account mainly what we are looking, income and expenses, even if it's direct or indirect. The golden rule for nominal account is debit the expenses and losses, and credit the gain and income. So what is the difference between expenses and loss? Expense means its effect from the day-to-day business. But for the loss, it will come maybe like in 6 months or 3 months. It's rarely coming. Like if we sell one old car or machinery, sometimes we getting the value less than the book value. So there is loss, but it's not related with the day-to-day transaction. And same sense, income and gain. Income is related with the day-to-day business or main activity, and the gain is from the secondary activity. That means not the main activity. So like example, as we said, if machinery we sold, so we receive the money more than the book value, so this is a gain. So it's also coming under profit and loss account. So the golden rule for the nominal account is debit the expenses and losses and credit the gain and income. If we paid the salary by cash, the salary is an expense. Now what we have to do, we have to make it debit. The salary we make it debit, and cash, as we discussed, it's a real account. So cash is going out from the company, so we credit. Then the journal entry will be salary account debtor to cash. In same sense about rent. If we paid rent, then rent is an expense, so it will be rent account debtor. So we will debit the rent and the credit cash or bank. Once we have sale is our direct income. Then what will be the entry? The sale we have to credit because it's income. If we made cash sale, then cash will come to our account. That means the real account. So cash will be debit and the sale will be credit. If we make the sales by credit, in that case, we have the accounts receivable. So who received the goods? The customer A received the goods. If we make a credit sale to customer A, in that case, customer under which type of account? It's under personal account because it's a person. So what is the rule for the personal account? Debit the receiver. So in this case, who received the goods? The customer A. So here we will make the entry, the customer A account debtor to sales. Sales is a nominal account. So that's why it's credit all the income. Before we end this video, we have to look few things. Normally the accounts coming under balance sheet, it's all either real account or personal account. And the accounts under profit and loss account all going for nominal account. This bank loan under which type of account? It's under personal account. Why it's personal account? Because the liabilities represent obligation to pay someone or something. So here bank loan, we treat it as the bank as a person, they give it to us. So here we treat it as the bank loan provided by the bank as an artificial person. And for accumulated depreciation is a real account. Do you know why? Because it's a reduction under fixed asset in balance sheet. Thank you for everyone. See you in our next video.